I want to do something a little bit different. I want to talk about a trade that we were in today, and this trade is an IPO lockup. Who on here, I noticed I have a lot of coaching clients on here, who on here has risked money in sale or is part of the sale trade? And also, if you would, was the trade good? Yes, good, no, not good. Because what I want to walk you through is how trade recommendations are not enough. Because if you have 10 people, you're going to have 10 different results every single time. Now, I want to share all these answers so you guys can see, because we have lots of yeses. Warren here crushing it. Steve here making 100%. Doug didn't do well. Ron doing okay. David, good so far. Okay, so I'm just letting everybody see these. Can you guys see the replies? Okay, cool. Awesome, awesome. Sale is an IPO lockup. I shared this idea in April, okay? April was like right around this area here. I want to share this trade because as traders, all we can do is put ourselves in the best position to succeed. That's all we can do. After we do that, the market's going to do what the market's going to do, right? It's like sports. Oftentimes in sports, all you can do is prepare. You do your preparation, you work as hard as you can, and then, you know, the ball is going to bounce the way it bounces. Patrick here, down 45%, okay? So you can see from the answers, though, we have people who are crushing it. We have up 100%, we have down 45%. We have those that traded it well, those who didn't handle it well. Okay? In trading, we need to control what we can control, and all we can do is make sure that we make good decisions. The way an IPO lockup works, I'll go over that real quick. Sale had their IPO back here, okay? They IPO'd at like $14 or $15. Now, when underwriters price an IPO, they price it at a price that the market is going to see that as being good value. So if sale goes to their underwriter, the underwriter is not going to bring them out at $15 and then the stock's going to trade at 10. That's really, really, really embarrassing for the underwriter because that means they can't value a stock. So they valued it at 15, and you can see there was some support here because underwriters are going to support the stock. Now, a name like Sale IPO'd back here. Its lockup date was first announced May 16th. Okay, May 16th is right around here. During their IPO, they released 20 million shares. So 20 million shares were freely tradable to the public. After the lockup, 60 million shares that were previously restricted are then able to be sold or traded. So think about this. Think about if you're private equity, you invested in Sale, you got 10 million shares. It's trading at 15, cool. You can't get out for 6 months. It goes higher, it goes lower, it goes higher, it trades up to 22, goes back down, trades up to 27. You probably want to get out. You probably want to lock in 100% of your profit, but you can't do that until the lockup ends and the restricted shares are available to be sold. One of the trades that I love to do is trading IPO lockups. And that's why I shared this idea in April, and the idea was to buy puts in Sale going into their lockup. It's a very, very high probability trade. It's a trade that I think that all retail traders should take advantage of, especially because if we're buying puts and you buy puts for 50 cents, if you do that 10 times, $500 of risk. You can never lose more. The lockup date was first scheduled for May 16th. Because options expire on the third Friday of every month, for me, I wanted to be in the May expiration because this lockup would have been in the May expiration. So my trades that I did were all in May. Unfortunately, while the 100-day IPO lockup expiration for Sale was scheduled for May 16th, this date is usually delayed when the company reports earnings within close proximity to the IPO lockup. Sale reported Q1 results on May 9th. What happened was, because Sale reported earnings May 9th, I guess this pushed their lockup back to May 29th. What happened was, I made a mistake. I don't even know if it was a mistake. I was in the wrong expiration. I was in May. The lockup changed to May 29th. So the proper trade was to be in June. So all the people that you just saw who had 100% gain or are doing very well, those guys are most likely in June. The ones that were in May are going to lose money on the trade. I personally was in May, and this is where it's going to be a little different, because I want to walk you through exactly what I did. A lot of BSers out there. I want to walk you through the exact trades that I did, and I got to tell you, it didn't work for me. I'm one of those people like Patrick here. Patrick's down 45%. I lost 100, well, I didn't lose 100%, but let me walk you through what I did. And I try to color code it. So if we go here, here are my exact trades. Okay, this isn't simulator, this isn't like game playing. 4/11, April 11th, I bought 20 puts and I color coded that to the red. So right here, I was waiting for Sale to pop, to rally, and I was gonna buy puts. I bought 20 puts at $1.95, 10 at each, okay? That was 4/11. Again, it didn't do anything, it rallied again, so this day, I'm gonna buy puts. I'm gonna add onto my position. When I teach people how to trade options, I want people to figure out what number you're comfortable risking, and then ladder into your position, knowing that you can never lose more than you bet or than you trade. So in the blue here, April 17th, I bought 10 more. So at this blue line, I'm long 30 puts. Again, the darn thing spikes. I am not happy. So what I did is I tried to buy 10. I only got filled on 7. 25 strike puts at $1.60. And then the next day, those puts came off and I covered them. So you see, so I did 20. I did another 10. So I'm long 30 puts. Now I did 7. I'm long 37 puts. These came off. I bought those back. Okay, so you can see $1.60, $2.95. So what I did here is I locked in $1.35. I locked in $1.35 because I am playing defense. Red offense, blue offense. Now I'm getting pissed off. This thing keeps going against me. This trade that I did is just to finance this trade. I want to lower the cost basis. So I did this trade. As soon as it came off, I bought it back. I lock in $1.30, so that helps lower the cost basis. Now, when it continues to rally, I do a trade again where I buy 10 more, which is up here. Unfortunately, I messed up because I'm in the May expiration, so I expired and ended up losing $3 grand. I went into this position comfortable, risking $5,000. That's what I was, the table size that I was playing with for this trade, and it ended up not working. What I did though is I learned an important lesson. And my lesson that I learned was, hey, I didn't know that IPO lockups get pushed back when earnings come out close to that date. I didn't know. So I made a mistake, but I'm not going to make that mistake again. This came out last night. Sale Point did an offering for 15 million shares. Today, Sale Point dropped big time. And everybody that was in June ended up making money, ended up doing really well. I'm really happy for those guys in June. I messed up. I effed up. Being someone who does this for a living, I messed up this time. I promise I will never make this mistake again. The reason I won't make this mistake again is because I look at my kids. I look at my wife. I know that I want to do nothing else for a living besides trade. That's all I've done for 18 years. So when I make a mistake like this, I lost $3,000. I look at it as Not that I lost $3,000. I look at it as I should have made $5,000. So therefore, I look at it as an $8,000 mistake. As far as other people who were in June, awesome. Good for you. You guys made tons of money. I love that. Okay? But the purpose of this is I've been trading for 18 years and I make mistakes. This thing wasn't really a mistake. I've learned from it and I'm going to learn and I'm going to get better. But just like I'm going to learn and I'm going to get better, you need to learn and you need to get better. Here's sale. 5 minutes. Here was the low of the day, 21.17. Look at all my coaching clients. 20.41. Okay? I've noted to buy stock. Buy it in the pre-market. You get filled at 20.41. Over here, Matt gets filled at 21. Joe gets filled at 20.95. Being in front, managing your positions, things like that, many retail traders don't take advantage of. Okay? If you miss this trade, it closed at $22, right? Let me go back to that. Sorry about that. So if you missed the trade in the morning, you closed at $22. That's a big difference. So it's little things like that, little lessons like that, that, hey, get in there, buy before the opening. Those are the best levels. I have an order to buy stock at $21 and $20.50. See what transpires. Buy it now. Go buy it now. And then he goes and gets it. Okay? I'm only in, that's awesome. I expired. Sorry for the bad language. I'm not happy about it. Some people went out to June. Okay? For this trade, the right move was being in June. But I'm going through this exercise to show you that, hey, I'm not going to sit up here and say I'm perfect and and whatever I touch turns to gold. No way. This is real life. That's exactly how I manage a position. I'm happy that I was able to finance the position a little bit here and make back some. I just didn't lose 100% the principal. But the big thing now is, are you able to learn from it? Are you able to recognize this and say, you know what? Oh yeah, I remember sometimes the lockups get pushed back when they're close to earnings. What I do is I have a note card and I have a collection of note cards and I put it in my desk of all little things that you've learned on the way. I tell you what, lockups is a really interesting trade and probably a trade that you're not going to learn in a book. But what you're really not going to learn in a book is you're never going to learn that when lockups are scheduled around expiration, around an earnings, oftentimes they get pushed back. Those are lessons you learn from the School of Hard Knocks. Lessons that you can cover your position before the opening. Lessons that if you're trading options and they release earnings after the close, you need to be sitting in front of your computer and be willing to buy or sell stock to manage your options position. The money's too important. And if it's not, if you don't care about the money, then be paper trading. Okay? Any questions on this example? Does that make sense of why I put you guys through that? Just to show you that having a trade idea is about 20% of the battle. What's really important is learning why. Why we're in this lockup. I look back, it's a great trade. I got no problem with that. I shouldn't have messed around with May being that close to the lockup date. That was my big mistake, but that's also why I wanted to walk you through this and then walk you through so you can see, hey, 10 people take the exact same trade, you're always going to get 10 completely different results.